So Powell admitted, because he was asked, why are the people still upset about inflation? Because you claim inflation's come way down, but people are still upset. And Powell says, yeah, they are upset and they have a right to be upset, right? He said the reason they're upset is because even though inflation has come down, prices have not. And he admitted that prices today are a lot higher than they were a few years ago. And that is why people are so upset. Where the price of gold is today is considerably higher than it was the last time the Fed cut rates. And the fact that the Fed is cutting rates and the gold price is going up is not a coincidence. Gold is reacting to a Fed that should not be cutting rates. Rates are too low, and the Fed is making them lower. And so the rate cuts are a mistake, and gold is clearly signaling that it's a mistake.
Peter Schiff raised the alarm once more, while Wall Street applauded the Fed's most recent move as evidence that inflation is under control. He maintained that the so-called soft landing story is merely wishful thinking and a transient delusion based on denial, deception, and debt. The stock market and employment statistics don't tell the whole situation according to Schiff. It's gold. He said that gold is quietly setting records as the Fed lowers interest rates due to ongoing inflation, indicating a decline in confidence in the dollar. While US politicians act as though it doesn't matter, foreign central banks are purchasing it at historically high levels. According to Schiff, ignoring the message of gold while the monetary system fractures beneath the surface is the greatest policy error of our time. He clarified in his most recent podcast that every decline in gold is a chance to purchase rather than a red flag. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
Increase in prices. But I'm going to get a little bit more into that because he clarified and made some interesting comments in the Q&A. But before I even get into that, and we're going to take a quick commercial break, but before I get into what was discussed, I want to talk about the one thing that wasn't discussed at all, that never came up once, and which should have come up, and that's the price of gold. $4,000 gold, the fact that gold had shot up so much between FOMC meetings should have been brought up, but wasn't, right? Gold was completely MIA at the Federal Open Market Committee meeting. Now, considering the fact that gold is the main monetary asset, central banks now have more gold than U.S. Treasuries, foreign central banks. You would think that the rise in the price of gold would at least have deserved a question. I think it should have been front and center. I mean, the Fed should have to address that elephant in the room. But no, the topic was never even discussed. And I've mentioned on my podcast that Alan Greenspan, who people call him the maestro, and he's still held in high regard, including by, a lot of members of the Trump administration who speak about him. He specifically said that gold was his barometer of whether or not he got interest rates correct. That even though we weren't on an official gold standard, unofficially we were, because Alan Greenspan still looked towards the price of gold as a market indicator of whether or not rates were too high or too low. And so what he told Congress was $400 gold meant he was too loose, and $300 gold meant he was too tight. And so he was kind of eyeing for around $350. And so if the price of gold stayed around $350, that would indicate to him that he had got interest rates about correct. Well, if $400 gold meant that Greenspan was too loose, what does $4,000 gold mean now? What is that saying about the Powell policy? Clearly, if 400 was represented too loose money back in the 80s, well, then 4,000 certainly must represent the same thing now. And so that's why it should have been brought up. And by the way, my last podcast, I titled it Gold Test $4,000 Support. And some people might think, well, obviously it failed the test because now we're below 4,000, which is the case. We did end up falling below it this week. And in fact, gold closed below 400 today, although it did trade above 4,030 this morning. But it closed below it. As I'm speaking, we're up about $20, but we're still just below 39.50. But also on my last podcast, when I talked about 4,000 support, I did say that it was very likely that gold would go below 4,000 and that 4,000 could be support even if the market was to go below. Because I think it's going to be similar to the way we handled the 3,000 support. It wasn't like 3,000 was some line that we couldn't cross. And the same thing with 4,000. We get below it. But whenever you get below it, you are in a support zone. And just like the market never fell too far below 3,000, I don't expect it to fall too far below 4,000, nor do I expect it to stay below 4,000 for any long period of time, because that would give too many people the opportunity to buy it below 4,000. And I don't think that's going to be the case. So I still think that we're at 4,000 support, even if we're trading at 3,950. I mean, we're close enough to 4,000 to say this is where the support is. Obviously, the resistance now is closer to 4,500 because we did get up to, I think, 4,400, because we got up to like 43.80. So we didn't quite trade 4,400, and then we had the pullback. But even with the pullback, where the price of gold is today is considerably higher than it was the last time the Fed cut rates. And the fact that the Fed is cutting rates and the gold price is going up is not a coincidence. Gold is reacting to a Fed that should not be cutting rates. Rates are too low, and the Fed is making them lower. And so the rate cuts are a mistake, and gold is clearly signaling that it's a mistake. Yet none of these journalists who are invited to ask, Powell questions understand enough about money or economics to ask the question or to point out that gold is flashing a warning, or they don't understand the warnings themselves, right? Because, they have to flunk a test on economics before they could be a journalist, an economics reporter at a lot of these newspapers or television networks. And then, then they get to ask these questions to Jerome Powell.
In response to Jerome Powell's most recent remarks, Peter Schiff didn't hold back. Powell presented a picture of a robust economy, stable prices, full employment, and effective Fed policy. What caught Schiff's attention most was Powell's admission that Americans are right to be frustrated about inflation. Even though the official rate has come down, prices remain far higher than they were just a few years ago, and they're still climbing. Schiff agreed with Powell on that point, but said the Fed chair completely misses the real issue. Schiff contends that in order to recover real purchasing power, Americans require both lower prices and higher interest rates in addition to slower inflation. He questioned why the Fed, which already acknowledges that prices are too high, still targets rising prices with its inflation rate of 2% target. Schiff contended that the Fed would pursue price stability through declining prices rather than ongoing inflation if it genuinely cared about consumers. Show some love by hitting the like button, subscribing to the channel, and turning on notifications. Now, let's get back and hear his following words.
Right? And the Fed, Powell is talking about how great everything is. We're in such a great place because the Fed has done such a great job of micromanaging the economy with interest rates and making sure that we have full employment and stable prices. This is all a bunch of BS. On the Fed's watch, our entire industrial economy has disintegrated, and we've outsourced all of these manufacturing jobs, and we've replaced them with these service sector jobs. And we have this gigantic credit bubble. And Powell is completely clueless about any of this, right? We're not even close to being in a good place. Now, let me look at a few other things that they spoke about. Oh, this I thought was really rich. So Powell admitted, because he was asked, why are the people still upset about inflation? Because you claim inflation's come way down, but people are still upset. And Powell says, yeah, they are upset, and they have a right to be upset, right? He said the reason they're upset is because even though inflation has come down, prices have not. And he admitted that prices today are a lot higher than they were a few years ago. And that is why people are so upset, because the high prices haven't come down. In fact, they're still going up, right? So if prices were too high and now they're going up, even if they're going up a little, you're still making a bad situation worse. Now, I agree with what Powell said. Yes, the problem is prices went way up and they never came down. But whose fault is that, right? Why doesn't Powell, or why doesn't somebody ask Powell, okay, then why are you targeting 2% inflation? If you admit that prices came way up and they never came down, why don't you target falling prices, right? Why can't the Fed pursue policies to bring prices back down? Because that's what the public wants. Why can't they get it? Because remember, right, when inflation had been too low, according to the Fed, right, it was below 2% for a few years. The Fed said, oh, no, we need to average this up, right? Inflation's been too low. We've been below 2%. We need to average it up to 2%. So we need to run monetary policy a little hot because we need to make up for all the years where inflation was lower than 2%. Well, if you admit that people are pissed because prices are so high and inflation was way above 2% for so long, why, based on the same rationale, why is the Fed not targeting inflation way below 2% to average all that high inflation back down and to deliver actual relief to the American consumer who he claims he cares so much about, right? Oh, we're here to help the consumer with price stability. Okay, well, that means we need lower prices. We don't need prices to go up by 2% a year. We need prices to come down. And in fact, they need to come down by a lot more than 2% a year because they went up by a lot more than 2% a year, right? If prices went up by 6, 7, 8% in a few years, why can't they come down by the same amount, right? I think people would be very happy, would be very relieved if they had that kind of price decline. But no, that's completely off the table because as far as the Fed is concerned, it doesn't matter how high prices go up. They always have to keep going up, right? So if we have 1 year where prices go up by 50% in 1 year, the Fed wants to make sure that next year they go up another 2%. So you're at 52% and then 54%, right? We can't have prices go up 50% and then go down by 10%. Oh no, that'd be a disaster. We can't allow that. This is what Powell is saying. That's why
Jerome Powell's story about the so-called strong economy is dismantled by Peter Schiff in one of his usual ways. Powell's optimism, according to Schiff, is a fiction based on flawed data and even worse policies. Powell says the Fed has achieved full employment and stable prices, but Schiff says that's absurd. America's industrial foundation has crumbled under the Fed's leadership. Production has been outsourced abroad, and the country's economy increasingly depends on debt, speculation, and low-wage service jobs. He draws attention to Powell's unusual remark that Americans have every reason to be angry about inflation. Powell stated that prices are still rising and are far higher than they were previously, despite official figures showing a slowdown in inflation. Schiff concurs with that assessment, but notes that Powell is unwilling to address the Fed as a whole. Schiff questions why the Fed is still aiming for rising prices through its 2% inflation objective if the issue is that prices increased and never decreased. Schiff draws attention to the dishonesty of the Fed. The Fed stated that it would permit greater inflation for a while in order to make up for the past when inflation fell below 2%. However, the Fed won't do the opposite now that prices have risen well over target. It won't tighten policy sufficiently to lower prices. Because of this one-way reasoning, living expenses will always increase, locking regular Americans in a never-ending cycle of inflation. This way of thinking is ridiculed by Schiff, who claims that even if prices increase by 50% in a single year, the Fed would still insist on an extra 2% the next year rather than letting them decline. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.